Today, 2 years on, we're right in the midst of putting the project financing package together to really kick off development and construction activities on what is one of the world's highest grade undeveloped gold projects out there. It's had more than $200 million invested in it previously by Goldcorp and prior to that Glamis. It's high grade, and the feasibility study, which we delivered earlier this year, demonstrated that it would produce gold 130 to 150,000 ounces over the first 3 years at less than $600 an ounce all-in sustaining costs.
So let's start with Guatemala, first of all, as a mining jurisdiction. Tell us a bit about that.
Sure. Guatemala is a developing country. Most people don't realize, in fact, that Guatemala has had probably the most stable currency in Latin America in the last 10 years. And people kind of stop and say, well, why is that? Well, they have such a strong fiscal policy. They're not running big deficits. The economy's been growing at 2 to 4% per annum. Harvard Business School recently pegged it as being one of the 15 fastest growing economies over the next 15 years. I've been, quite honestly, positively surprised. In Guatemala, there's a set of rules. There's a mining act. We're held to account, and it works. So we're very excited about the project. No doubt, in this business, whether you're in British Columbia, Nevada, Queensland, or Guatemala, always plenty of bumps on the road, and that's unequivocally, we'll have that as well. But I've been very happy so far.
Your AISC is really low. I mean, really low. You know, it's not just sub $600. It's getting down. Getting much lower than that. There's a lot to like about it. So, what's the problem?
Well, I mean, I don't necessarily know there's a problem. I think that no doubt we, since we got involved previously, Tahoe with our Escobal project had a challenge, and it was in the courts really around the ILO 169 consultation, and the outcome of that as it moved through the courts was fine until it got to the Constitutional Court and they reversed the decision. And so that's ultimately been a big speaking point. Less so today, to be honest, because I think as investors have actually come down and had a look themselves, they've come away and been much more comfortable. When you think about the definition of risk in the mining dictionary, well, guess what? I mean, Bluestone's one of those. We've got a project that we've got to finance, we got to build it, we got to commission it, we got to bring it on, and it's our only project, right? So from a risk reward perspective, there's huge reward here. But if we look back over the last sort of 1 to 2 years, really, I think the investors that have been focused on, say, precious metals have been more kind of gravitating to the cash flow stories, the ones that are actually producing. And that's very typical. So as things sort of continue to move on here, things will gravitate down into developers, and there's just not many high-grade gold projects that are coming down the pipeline in the next 2 years.
But your share price isn't reacting to all of these positive, components. It really hasn't. If anything, if it wasn't for the bump in gold, I'm not sure where it would be today. So, what have you been doing about that in terms of getting out there? You've got some investors have come in and they think the country's great and the project's great, but the rest of the market, you can't expect everyone to turn up. So, what are you going to do about telling that story?
My experience is that, these things don't happen overnight. And we've got a great project that's advanced. It's had a lot of capital invested in it. The numbers speak for themselves. At today's gold price, this thing has, a 50% IRR and will pay itself back in a year and a half. And that's why those commercial banks and those large sort of tend to be more conservative institutions we're engaging with right now and have had very good feedback around this project finance.
You've got a lot of institutional money in there. And do you think that's the problem? Because the institutional money, they're not trading.
Well, I mean, if you look at the liquidity, when you run down through the Lundin family, CD Capital, management, Goldcorp's position, which of course is now Newmont, just in those 4 baskets, you have roughly 65% of the stock. And then when you add on the institutional, kind of holders, obviously, and you start getting chunky 3 and 4% positions, no doubt, a lot of that's actually sitting tight, and guys that have come in and made an investment last year or this year or even 18 months ago are not here to trade it. They're here to see this mine financed and brought on and generating more free cash flow in the first year of annual production than the market cap today.
Yes.
So that is a driver. We are spending more and more time, though, definitely on family offices, retail brokers, that sort of thing. And believe it or not, our trading liquidity today is much better than it was 24 months ago on the back of that. But it takes time, for sure.
You've got your PFS. you're waiting to work out how you structure your finance. So there's a lot of waiting around. So where are you with that? What can you tell us?
Our timeline, we've stated to the market, we're hopeful to have the financing in place by the end of the year. I think there's a possibility, depending on which route we go, it may trickle into the first quarter, but we'll be looking to have some sort of tranche of financing in place before then, so we can actually get going on the construction. I want, the best cost of capital with the best execution on the other side, and the most flexibility. And on the other side of the table, from a financing group, of course, they want the best return that they can get with the best execution as well. And they're obviously investing in the management team and our ability to execute and deliver on this and then pay back the investment.
You think you'll be able to run this thing for 15 years, not just the 8 years life of mine that currently stated. So have you done that based on the mining, or have you done that based on the need to impress the financiers?
The model itself is going to want to drive for grade. And if it drives for grade, it means you've got higher grade areas and the same amount of tons of rock. It means your production profile comes forward. That obviously helps the overall economics as well when you look at from an NPV or an IRR perspective. And so that's what you're really seeing there, is that some of the mining up front is actually pulling out higher grade stopes, which is really driving some of that production numbers up front. We're quite confident that as we continue, and we're doing this now over the last six months, as we continue to upgrade resources from inferred into indicated, they will work their way into the mine plan, and you'll see that production profile then continue to stretch out.
How do you remunerate these guys? What do they expect from you?
Sure. So from I guess kind of splitting it up, the TAC, the Technical Advisory Committee, are non-board members. Yeah, and solely really as a sounding board. And so that's really just ad hoc on a per hour basis. So not a huge cost at all. And in fact, I tell you that these are cheap dollars compared to building something that doesn't work on the back end. And there's plenty of experiences on that. So it's important not to step in the same bear traps that in many cases have been stepped in over the last 10 or 20 or 30 years in our industry. From the board perspective, it's very, very similar to what any other sort of junior company. It's a small stipend. Per board member, and then for those that chair a committee, for example, the audit committee or the technical committee, for example, they would get a few $1,000s more per year. But it's not a big cost by any means. And at the end of the day, I mean, you kind of get involved in this space because you like the people that are around you, and you're excited about the prospects to oversee value for shareholders.
Not always. I've seen some fantastic salaries, and the word stipend wouldn't be applied. So
well, not on the board, and you can look up our filings.
Oh yeah, it's all public information for sure. And I always encourage people
doing this to get rich.
That's exactly why they're doing it, isn't it? You've inherited a lot of infrastructure, right? A lot of tunnels, etc. A lot of work has gone into this. What was the number? 200.
Yeah, about 200 million, more than 200 million, in fact. About 180 million went into, or 160 million, I guess, probably closer to 180 million now, into the gold project. And then the geothermal project as well had another, call it 60 or 70 million dollars invested in it.
So let's stick with gold for now. So of the 160 million, what was that spent on, and what's usable for you today?
Now, being honest, when we think about that, call it 160, 170 million dollars that have been sunk into the project to date. How much of that was money good? I don't know, maybe 120, something like that, because there was a 4.5 year period of time where the project was put on care and maintenance.
Yeah.
And so when we arrived, really there hadn't been much happening there. There hadn't been geologists on the project for almost 5 years.
Are you getting any value for any of that Goldcorp investment?
I think that when folks come down and take a look, they realize that you've got, what looks like a mine. It doesn't have a process plant.
But that's folks. I'm talking about the market. What's the market giving you credit for? Is it your feasibility study? Is it answers in the ground? Is it all that data you've inherited? What is it?
Ultimately, our job is to take what we've got and turn it into something that's generating cash flow.
Yeah.
Is 20% of the value associated with the sunk capital? I honestly can't tell you that, but I can tell you that it provides a very clear picture when folks come down, and they have the perception and they see what's there. And case in point, that financing we did earlier this year, nobody was raising money. Everybody kind of scratched their head and said, Bluestone, $10 million bought deal, good luck. Yeah. 2 weeks later, it's $22 million. And so I think, proof really is demonstrated in terms of what we've been able to do in a short period of time.
But are you going to use that money for growth, or is this a short window, make hay while the sun shines, and then we'll move on to the next thing?
Yeah, I mean, we'd love to continue building a company and use this as a great platform. I mean, where else can you find a business that is going to generate more free cash flow in its first year of production than the market cap, right? So a great place to start. But we've also got plenty of bumps along the way that we got to get through. So no, I mean, my vision for the company is ultimately to get this up and get it going, and then use that cash flow to pay back our debt, and then start to look at things like returning capital to the shareholders. I'm a shareholder. We all love our dividend checks, and I think that it sends a very clear message to investors in the market on capital discipline, capital allocation. There's no reason why you shouldn't be able to initiate some sort of, even if it's a modest dividend, and then depending on how the company is doing on a annual basis, then issue a special dividend. That's what my experience in the past, and it's worked very well.